Hello everyone, Frankie Sarinelli from Sarinelli and Associates. I hope this finds everyone well in the new 2021 year. It is January 4th right now. I am here to talk to you about the Consolidated Appropriations Act of 2021, which is the new stimulus package. In this, there are many of things from stimulus checks to foreign aid spending. I am not here to talk about any of that. You can find information about that on our website at sarinellicpa.com. I'm really here today to give you a little bit of insight onto what you guys are really looking forward to is the PPP2. But before I get into the PPP2, I just want to talk to you a little bit about some of the changes that are made to the forgiveness side of PPP1. Okay, one of the biggest things that has changed in the PPP1 forgiveness is that when the original bill was out, the way it was written was anybody that received the loan, okay, and had it forgiven, the amount received from the loan was not included in gross receipts or income and taxable. But the IRS then later came out with a ruling saying that anybody that qualified for the forgiveness of it was not allowed to use any of that, was not allowed to take the expenses, the deduction for any of the expenses that you used a forgiven PPP loan on. Well, lo and behold, Congress actually agreed on something across the aisles, and they both said that was not the intent of the loan. We waited about 6 months for this to come through and actually get passed. So the bill now has in it that you are allowed to take the deduction for any of the expenses that you used the original PPP loan for. That is a very, very big tax break for everyone that did manage to get some of the PPP funding. The second big thing that's happening as part of the PPP forgiveness on the PPP1 forgiveness is that the EIDL advance that you received, and everybody should remember when they filed for an EIDL loan, whether or not you took the loan, they were giving advances. At first it was up to $10,000, and then they quickly changed that to $1,000 per employee. Well, on the forgiveness side of the PPP, what happens is you have to tell them how much of the advance that you received, and that was the portion that you would have to pay back that was not able to be forgiven on both sides. So you had to pay it back. They changed that now, and they are going back retroactively for anybody that had already filed the PPP forgiveness loan applications, and they are not making you pay that back. So you kind of got a double bonus there. The last thing that they changed on the forgiveness applications is the simplified method, which was the 3508S form, was for anybody that had a loan of $50,000 or under, and you still had a documentation requirement that you had to submit to the SBA and to the banking institution. They have now simplified that further and said that there is going to be an affidavit that you sign that you needed the money, you used it appropriately, and it is $150,000 of loan money, and under can file this simplified form, and you do not have the documentation requirements. Okay, so those are the three things that are happening on the PPP loan forgiveness side. On the PPP2, much anticipated. So I'm gonna jump right into it and talk to you guys about the requirements and the eligibility of it. Okay, so in order to meet the eligibility requirements of it, for PPP1, a little bit different on PPP2 is that you have to have fewer than 300 employees instead of the original 500 employees. The loan itself is maxed out at $2 million instead of the original PPP loan was maxed out at $10 million. So you're only eligible for up to $2 million. Another criteria is that you have to have used or will have used all of the funds from PPP1 before you can apply for PPP2. Okay. I would say the biggest criteria for this is going to be the decline in gross revenue. Okay, so what this is that in order to qualify for PPP2, you have to be able to show that throughout any quarter of 2020, okay, any one quarter, as compared to the previous year, the same quarter, Okay, so if you're saying first quarter of 2020 as compared to first quarter of 2019, and so on and so forth, you have to be able to show a 25% decline in gross revenue. So that's your gross receipts, okay? It's not your net profit, it's your gross receipts. So if you can show a decline of 25%. Now, just like with PPP1, we do expect changes and different interpretations to be coming out. This is actually not even finalized yet. The SBA does have a application form out for this, but they do have until Wednesday, January 6th, to change the application form and go back to Congress for any kind of changes that they want made. That's part of that 10-day period since the bill was passed on the 21st of December, and then it was signed into effect on the 27th of December. They have that 10-day window. So be prepared again, like we were with PPP1. We expect a lot of changes, and we're going to try and keep you up to date as best we can as we move forward. So a big question is how do I calculate the decline in gross receipts? So for a quick example, let's say if you have you take your first quarter of 2019 and your gross receipts, the income that you had brought in was $80,000, okay? And then you have your first quarter of 2020, okay, was your gross receipts were $48,000, okay? So you take that $80,000, okay? You subtract out the $48,000, okay? And that should net you $32,000. You take that $32,000, then divide it again into your $80,000, okay? And that's going to come up with your percentage. So that would be 40%, okay? I want to take a quick look at the application that they have out on the SBA website. There is a link to it below this video, and there's also a link to it on the original email that you received with this video in it. So I want to take a quick look at it and show you guys it is not much different from the PPP1 application, although we do expect some changes and some different guidance and guidelines to come out. Just want to show you so you could be ready for what to expect as of now. Okay, so let's take a look at this. Okay, everyone, so here we are on the SBA's website, and like I said, there is a link to this, but if you just Google form SBA form 2483, this is the application form for the Paycheck Protection Program, and this is going to be for the Paycheck Protection Program 2.0. Here, if you scroll all the way down to the bottom, it shows you these are all the versions of the applications that are existent on here. This goes all the way back to June from when the first application for PPP1 was established. And you can see here that this was updated on 12/31/2020. This is the application for the PPP 2.0. If you click on the link and we just download the form here, okay, you can see here it says Paycheck Protection Program. It does not say 2.0, but we do believe that they're going to be changing that very soon. Like I said, there's going to be a lot of updates to this that we're expecting. But if you look at the rest of the form, it is very much the same as what we had on PPP1. It is your business entity, your names, your contact information, your ID numbers. And here's where I want to get into the meat of it, which is, if you can see, this is it. There's not much here. It's the same as the original applications. So your average monthly payroll cost, okay, they are using the same average monthly payroll cost, which is the total of your payroll. For now, the one difference here is that you are allowed to use your payroll costs for 2019 or 2020. Okay. It's not clear whether or not it is the higher of the two yet. We're still waiting for guidance on that. But as of right now, they're saying you can use either or 2019 or 2020's payroll cost. Okay, so your average monthly payroll cost, again, is capping anybody that has a salary of $100,000 or more. If you're a sole proprietor and you have no W-2 and you're not on payroll, it would be your 2019 Schedule C income. For partnerships, it's your 1065 income, and it is your payroll cost divided by 12. That gives you your average monthly payroll. And then what they are doing is the same thing. You are going to take that number and you are going to multiply it by 2.5 times to come up with the net of what your loan amount should be. One thing I want to note here is for restaurants and for the entertainment business with the NAICS code 72. Okay, so that's with code 72. This number is going to be not 2.5 times, but 3.5 times to come up with what your loan is. And listen, we all know that's because, restaurants and entertainment industry was really hit hard by this, and they really need the help and support. So that is why they have increased it to 3.5%. Another thing I wanted to show here was this is where we had seemed to have a lot more confusion on the number of employees. There was a lot of confusion there whether or not if you're a sole proprietor, do you add yourself? If you're an S corporation and you're one of the owners, do you add yourself to that number? And the answer is yes. For PPP2, it's going to be yourself plus, any employees that you had on payroll. Okay, and that's going to be the number that you're going to put in for the number of employees. Going down, the only other thing that's really changed is the expenses. And if you look at this here, this is what you're actually allowed to use the loan money for. And that would be your payroll cost, which was in the original PPP, the loan, your lease and mortgage interest payments, utilities. Now, this other category is where now they have expanded the expenditure categories to some operating expenditures for software and cloud computing, that you needed during the pandemic to operate remotely. Some supplier costs, that would be payments to suppliers of goods that are essential to operating at the time that you made the application. Worker protection costs, that would be anything that was required by the CDC or OSHA for the COVID-19 safety measures, like masks for employees, sanitation stations, things like that. Any equipment that you needed to comply with that to reopen your business, those are now going to be included in the expense category. Other than that, this is pretty typical of what the PPP1 looked like. You have some questions that you have to answer, certifying that you needed the money, you were impacted by the COVID-19 virus. Again, you're going to have that 25% reduction in gross revenue ruling. So you also have down here some other certifications, which are pretty similar to the last time, that you needed the money. You're going to use a 24-week period or an 8-week period. You get to pick your time window prior to filing the application this time. And really, that's it. As of right now, we do expect, like I said, that this application is going to change. And we are going to get more guidance on it. And as we do, we will be updating updating our website. We'll be here to answer any questions that anybody has. You feel free to call us, make an appointment to have a phone conference or a Zoom meeting. But we are here for all of our clients as you need us. So please don't hesitate to reach out to the office. I hope and look forward to speaking to all of you soon, and hope everybody stays safe and healthy.